this single pattern appears right before the market explodes. Smart money traders watch for it obsessively, and once you see these three signs together, you will be able to catch these moves. Let's begin here by taking a look at the aggressive demand zone. This right here is one of the most important supply and demand zones to learn about, because as you can hear on the name, it's very aggressive, so it leads to fast price movements. But a good thing about fast price movements is that it can lead to, fast and lots of profit, but only if you know how to identify them correctly and, trade them with correct risk management and all that good stuff. But let's begin here by taking a look at how to identify an aggressive demand zone step by step. So step number one here is that we're looking out for strong and aggressive moves towards the upside. And what I'm looking out for specifically is something called momentum candles. And a momentum candle is a candle that is at least twice the size compared to the previous candles. So for example, if you look at this green candle right here, you can see that this green candle, if we measure this candle, you can see that it is roughly 3 times the size of, these previous red candles, or at least it's, more than twice the size of the previous 3 candles. So this right here is what I'm considering a momentum candle, and that is the first thing I'm personally looking out for when it comes to aggressive demand zones. And here it's important to mention that, different traders will have slightly different rules, what is an aggressive demand zone. Some traders even call it other things, but this is what I'm looking out for. The second sign here I'm looking out for to identify aggressive demand zones is that I'm looking out for something called bullish engulfing candles. A bullish engulfing candle is a candle that completely engulfs the prior red candle. So it needs to open below and close above the previous candle. And if you take a close look at this green candle right here, you can actually see that it opens below right here, and it completely engulfs not only one candle, not only 2 candles, but it engulfs 3 candles at the same time. This right here is a very good sign that we might be looking at a strong, aggressive demand zone. Last but definitely not least here, what I'm looking out for is that it's not enough to only see one strong candle. The third thing we're looking out for is that I want to see strong follow through. And what I mean by this is that after this strong first candle, I want to see a strong follow through move towards the upside, just like we saw right here. All right, so great. In this case, we have a strong momentum candle. This candle was also a bullish engulfing candle, and we also had this nice follow through move to the upside. So here we have good reasons to believe that this is an aggressive demand zone. And to really understand this, think about the law of supply and demand we talked about earlier, and also the supply and demand shift. In order to see these very strong price movements to the upside, there is no way to have these strong moves without seeing lots of more demand compared to supply. So something in the market happened right here that led to the demand shift. This can be as simple as, it might just be that a big hedge fund or big bank decided to step in and buy. Maybe they are done with some analysis and decided to buy, or they are using, algorithms that decide to buy if certain criteria is met. It doesn't really matter exactly the reason, but what we do know is that at that point in the market, we saw lots of demand coming in. So now we have enough evidence to draw our demand zone. And to draw your demand zone, what you want to do is that you want to draw an area here from where the aggressive demand move started. Then you draw the area here to the right and you mark up your chart something like this. If you guys are curious, but how exactly do I draw my supply and demand zones? Don't worry, I will show you guys exactly how to do this later on in this course. But for now, all you need to know is that you need to draw out a zone from the start of the aggressive demand move, and then you draw that zone to the right. And then the theory here is that since we saw lots of demand, we saw lots of buying pressure coming in the past, it's likely that we see lots of buying pressure coming in the future. Remember, this can be orders that didn't get filled during the first move, or it can simply be trading psychology, lots of traders paying attention to this demand zone. And in this example, we can see that the price went up. It traded like sideways for a while. We saw some moves right here. We saw a strong move to the downside. But you can see that once the price reached the demand zone, we actually saw some buying pressure coming in. The first bounce here was, not that strong. But you can see that each time the price came down to this demand area, we saw here a strong move to the upside. And then eventually right here, we saw this massive, aggressive demand spike to the upside. And now you of course might wonder, but okay, so I know how to find aggressive demand. How do I trade these levels step by step? Don't worry, we will talk about that soon. But before we do that, we of course have to also look at the aggressive supply zone. Alright, so now the time has come to take a look at the aggressive supply zone. And this right here is just like the aggressive demand zone, but the opposite. And if you guys want to, you can pause the video right here and try to identify some aggressive supply on your own using the same rules we talked about recently. Remember here that the first thing we're looking out for is that we're looking out for a momentum candle. That is a candle that is at least twice the size of the previous maybe 2 to 4 candles. It's not a super strict rule, but as a rule of thumb, I would like to see a momentum candle be at least twice the size, but preferably 3 times or even larger. And if we look here, you can, one candle that really sticks out, at least in my opinion, is this massive red candle right here. You can see huge bearish momentum candle. This one is, at least 5 times the size of all of the previous candle right here. So here we have a clear bearish momentum candle. The next rule here is that we're looking out for engulfing patterns, and when it comes to the aggressive supply zone, we're looking out for bearish engulfing patterns. And you can see that this red candle right here, it super clearly engulfs, pretty much all of these candles is engulfed right here. So that is an amazing sign that we're looking out for strong selling pressure, or in other words, an aggressive supply zone. The third thing here to look out for, remember, we don't just want to see one candle. Preferably, we want to see a strong follow-through move. And in this case, you can see that we did. Yes, we saw this strong red candle right here, but we also saw some very nice follow-through supply coming in. So in this case, in this aggressive supply zone, we had all of the 3 signs happening at the same time. That is a very good sign. So now we have enough evidence to draw out our supply area. And to do this, we draw a zone here around the candles, or around the start, the origin of the supply area. And then we draw out this area here to the right, just like this. And you can see that the price came down, we came up, and once we reached this supply area again, we saw this massive move to the downside. And to be a little bit more specific, right here we actually saw something super interesting. This right here is what is called an LG, which stands for liquidity grab. This right here is when the price quickly pushes above a supply or demand area and then sharply reverses to the downside. In this video, we don't have too much time to dive into liquidity and liquidity grabs and liquidity sweeps, but luckily I do have a full course on liquidity trading concepts, so I highly recommend that you check that course out after this one. But as I said, we saw this liquidity grab and then we saw this move towards the downside. And one thing I personally like to do is that after we see a test of a supply zone, we can actually adjust the area a little bit to catch the origin of the next move. So this right here was the next move, and to catch the origin, we do want to draw a new supply area around the liquidity grab we saw right here. So the next zone might look something more like this, As I said earlier, don't worry, I will show you how to draw supply and demand zones very soon. But you can see that the price went down, we came up here, we tested this supply for a while, and then we saw tons of supply coming in, and the price completely crashed to the downside. But alright, so before we can start taking a look, alright, so this video was actually just a very short clip from our full supply and demand trading course right here on YouTube. To watch the full course, simply click or tap on the screen right here. I hope I will see you all over there very, very soon.